Gene, you heard this news that we've been talking about from Tesla. What's your take?
It's a big disappointment, in part because I'm a believer in the story and think that this company has a great product roadmap. And whenever you see it stumble, whether it's production related, which I think it is in this case, it's just at first, my first reaction was just sheer disappointment. I want to try to put a little bit into perspective, is that it's about a 10% miss, which some may say that's a lot, some may say that's a little. It is a lot in the context when you're ramping a business and when you have this hyper focus on the production number. I do think that this is production related. I think the other piece that this really plays into is this concept of escape velocity. Is that investors, after a strong September quarter, were getting more confident that they could produce vehicles to get to a cash neutral position, cash positive position to service that debt. And the significance of this miss is compounded when you layer into the fact that there's some credibility issues in terms of how can investors sleep well at night. And so, when you put all this together, there's clearly going to be a change in the hands of the stock today. I'm still a believer, but think that we probably won't get to this escape velocity as defined by you don't have to worry about Tesla probably for another 6 to 12 months.
Gene, what do these numbers tell you? When you say it's a disappointment, is it a disappointment because you worry that the company can't get the cars delivered to people, or because people don't want the cars if they can get delivered?
Well, I think demand is doing well. I think as they've opened up, especially to international markets, they've changed some of the configurations, which suggest this is not a demand problem. I think that is the reason why I stand behind this story longer term, is that I think that they've got an incredible position within an open-ended market around EVs and autonomy and solar, all the good things that we know about Tesla. But the disappointment specifically is around visibility into production. This has been the pain point around the story for a year now, and it rears its head again. And I think it's just there's the piece about credibility around production and how do you what do investors really bank on and as they build their position. And then separately, I think that there's a question about just how does this impact cash. So let me just quickly talk about that. This large debt payment that they have coming up here in a month and a half is that they do have the money to service that without getting the stock to whatever that is, 367 or 370. So I don't think that the company's in any, and I need to be clear about this, it's a disappointment, but I don't think they're in any position to go out of business or this is going to cause some sort of cash crisis. I think that they ultimately will emerge from this, but that question is going to be debated here for the next few weeks.
Hey, Gene.
Can I just very quickly on the specifics on that? Tell me again what that is. We talk shorthand with it all the time, and I forget the details. In a month and a half, they have a debt payment due of what if the stock doesn't get to 367 to 370?
It's a big number. Off the top of my head, I don't remember. It's hundreds of millions of dollars.
Yeah.
Hey, Gene, there was I think it was in the Journal. There was an article, it was an op-ed piece. And I just thought it approached the whole Tesla issue from an interesting viewpoint that, all the subsidies and tax breaks that allow the company to do well. Rich people buy Teslas. I mean, not all of them, admittedly, but those nice ones. That has been a transfer payment to a certain part of the demographics of this country that it's certainly not. If you want to try to ease the tax burden on people that need to be at ease on it, we're trying to migrate this move to green energy by really lining the pockets of some really wealthy people. Did you see that piece, Gene? Could that become a populist issue eventually, or does the green thing overrule everything in terms of, you'll always feel virtuous if you buy a Tesla, even though you're getting a really good tax break and you've got $100,000 to spend on a Model X or whatever. Is it the S or which one is it? Is it the S? Yeah, it's nice. It's the S, not the 3. But even the 3 is it's getting cheaper and cheaper, obviously. But do you think these go away, and can the company survive that?
So on the tax credit piece, it is true that tends to be skewed much more wealthy. The reason is it's still an expensive car. And yes, that is some sort of a payment to wealthy people. But unfortunately, when you have emerging markets, we're talking 2% of cars in the U.S. were EV, 1% globally in 2018. When you have that, there needs to be a shift. It starts with people who have more money to embrace these technologies. And down the road, this hope of a less expensive Model 3, I think, is a reality. I think we will see that this year. And, they gave some numbers out on last call that the half of the trade-in, so there's a third party that you can trade in your Tesla, your old car in when you buy a Tesla. Half of those cars were under $35,000, which says that people are stretching, and our research would support that. So the simple takeaway is, yes, historically these tax breaks have helped the wealthy, but I think as this emerges and as this evolves, I should say, it's going to become more of a mass market. And the simple take is this. I mean, we can look at the production number and be disappointed, which I am, but you also need to step back and say cars shouldn't be gas-powered. It's silly. And Tesla has possibly the best opportunity to have the production outside of the issues announced today to get to a vehicle that can be at that mainstream price.
Phil LeBeau is still with us, too, and Tom Lee has a question for him.
Yeah, Gene, I know some automakers have experimented with subscription models for car ownership. Is this something Tesla's looking at, and would it be good or bad for the stock?
They are looking at it. They've talked about it on a couple calls. They think about that as kind of a Lyft or an Uber type of a business. And so I think that you probably will see that within a few years for Tesla owners to turn their cars over, and also that they'll take cars off of lease and turn them over. This is, we're talking down to autonomy here. So, I mean, that kind of gets back to this point about the forest versus the trees here. The trees is this disappointment, but I think if you look at the bigger picture, the things that they're building, just not only around electric, but autonomy and then the ride share, I think are pretty powerful, and I think that would be a good thing for the stock.
Hey, Phil, what do you think?
Hey, Gene, this is Phil LeBeau. Quick question. What was your production estimate for the quarter? And the reason I ask is they produced just over 86,000 vehicles, though when I've talked with a number of analysts, most were expecting somewhere between 92,000, even as much as 99,000. I talked to Jamie Albertine. He said, look, we think they could produce upwards of 100,000 in the fourth quarter. What were you expecting from Tesla?
On that number, we're at 91.5. So that's called a 5% miss. The 10% is, I think it's on the delivery number. The street was looking for 100 on the delivery versus the production of 90.5.